Hey y'all, happy Friday. Today is Friday, a beautiful day that the Lord has made. My name is LaDeborah. I'm a life insurance broker. Just want to come on real quickly to talk about the 3 different types of life insurance. And I'm talking about it as a whole, okay? Because this stuff can be broken down so many different kind of ways, but I just want to kind of hit it on the head, like the 3 different, types that we mainly talk about. We can go into the other stuff later, okay? So first of all, you have term. Think about term terminates, right? So term goes for a term period, okay? So it can be 5 years, 10 years, 15, 20, 30. I even know one company goes up to 35 years, term. A lot of people have traditionally used a term because you can get a lot of insurance for a little bit of money. And so when you think about it, you're like, man, you want to have enough. Some people use the DIME method: debt, income, mortgage, education. How much would it take to cover all of that, all of those expenses? So that's the amount of term you want to get. So whether that's 500,000, a million, whatever it is, some people just say, just give me 250, enough to take care of the house. Whatever it is, you can get a lot of insurance for less money because it only goes for a certain time period, whatever amount of years you choose. Generally, people choose the 30 years because of a 30-year mortgage, and that's the longest amount of time. Of course, no one is trying to get life insurance for 5 years. You're definitely hoping to be alive longer than 5 years, but some people just want to cover extra debt. They'll say, hey, I just got a yacht. I knew a man that just got a yacht. He paid $100,000 for the yacht. He won a $100,000 term. You can do stuff like that, So, whatever the case may be, you can get a term, okay? So that's term insurance. Term terminates, okay? Now, there are different kinds of term that, like I said, I'm just going over the general synopsis of it, but there are different types of term where that you can continue to pay that term, and it'll just keep going up in price as the years after that first time period. So say if you got a 30-year term, after the 30 years, it'll just keep going up in price as time goes on. So some people get rid of it because it just becomes too unmanageable to pay that amount of money. Okay, so that's term. Next you have whole life. So whole life goes your whole life, okay? So generally speaking, how a whole life is supposed to work, you make one payment and it goes the rest of your life. It never goes up. It doesn't fluctuate. There's no changes with it. It just is what it is. It's very straightforward. If you start paying $40 at 20, guess what? You're going to be paying $40 the rest of your life. You still will have your, say if you get $40,000 whole life, you're going to have $40,000 whole life when you're 80, okay? It just never changes, okay? And it builds the cash value on the inside, which some people like because they like to build up that money, have that savings building in there. Okay, so that's term, that's whole life. They're very straightforward. The next one is universal life, and so this one is a little different. I'm sorry, my phone is jerking, y'all, because I'm in the car, but universal life is a little different. It should work like a whole life policy, but unfortunately, what a lot of, how I have seen it being sold is and it's a shame, it really is a shame, most agents sold it as a whole life policy. And it can be whole life, but the universal life is built off of the stock market. So when that market begins to go up, you should go up in your payments. So they send you a yearly statement with the universal life policy. You will get a yearly statement that tells you, okay, hey, the stock market did pretty good. We're going to go up. We need you to start paying so and so amount of money. If you don't start paying that, it's fine. They'll start pulling it out of your cash value. But what I've seen done so many times now, too many times to talk about or recount, is they'll take it out of your cash value, and sometimes and if your cash value goes away, then your policy goes away. I've seen ones where they take it out of your cash value and then they'll decrease your face value amount, which also face value or death benefit, same thing. They'll decrease it, and where you had a $20,000 or $30,000 policy, now you only have, you know, like my dad, he thought he had 20,000. When I looked at his, he only had 2,300. Went to see another client. She thought she had 30,000. She only had 8,200. So if you don't pay attention to those yearly statements, then what you'll see is that insurance starts to go away. Okay, so those are the three main types of insurance. You really can get whatever, you know, you feel like you need, your family needs. Sometimes, you know, I'll tell people, you know, get a combination of the two. Get a combination of the term and the whole, or another product I like to sell, the IUL. A lot of people are loving those products because you get a little bit more insurance, but you also have that cash value buildup that's, you know, people are using for other things. So that's a whole nother ball game right there. But there are so many different types of insurance that you can get. Really, it's about what you need. It's important. The important thing is just sit down and talk to somebody. A lot of people don't have insurance and they don't get it because they don't think they can afford it. I'm telling you, insurance is so affordable, especially if you get it when you're younger. Like, we have wonderful programs for our children, and people always like, I feel bad for insuring my kids. Why? Stop thinking of insurance for getting insurance for your kids, like just if they die. You might need to get money out of that policy. You might need to get money out of that policy when they get older. You may need a little money to help them go off to college or do something. So it's not just for when they die. They need that money, you know, because it also, their policies build cash value as well. And it gives them guaranteed insurability. So say you can only afford a $10,000 policy, paying $4 or $5 a month. Well, it gives them guaranteed insurability. What that means is when they're 40 and they want to get more insurance, they can. Or 25, they want to get more insurance, they can. And they don't have to go through the medical test or anything like that. So you're able to set them up in a way that a lot of children aren't getting set up these days. I actually just did an IUL for a baby the other day. That baby's going to be really set up by the time they're 18. I looked at, they're going to be, by the time they're 30, already having $250,000 cash that they have access to by the time they're 30. So, you know, being able to set your children up is the goal. It's not just about, oh man, I'm putting this on them. I don't want to think about my kid dying. Get that out of your mind. Get that out of your mindset. You have to think longevity, life, legacy, setting our children up so that they won't have to beg, borrow, struggle the way that we've had to do over the years because you took the time to set them up properly. So, you know, make sure you're definitely doing that with your children. Reach out. Go ahead and reach out to me. LaDeborah. I've been in the industry 16 years. Absolutely love what I do. I'm a broker, so I work with a lot of different companies, and so I can sit down with the whole family. We can talk over whatever it is that you are thinking you may want and whatever it is you think you may need. We can talk it all over, create a plan based off of your budget for your family, and we can get you all covered. Okay, so I'm really excited to talk to you all. Just let me know if there's any more questions you have about basic terms. We can go into the depth of everything else during our consultation. Okay, happy Friday. Have a beautiful day, beautiful weekend. I love to hear from you all soon. My phone number, these streets are bumpy. I'm in Atlanta, so y'all know these Atlanta streets. My phone number is 678-824-2874. 678-824-2874. Call me. I look forward to hearing from you soon. Talk to you all. Bye-bye.